Hello, everyone. Welcome back to HowToTradeAndSwitchMarkets.com. I'm Shane Vernier, and this is Trading the U.S. Open. Today, we've got a lot to cover. We got a lot of trade recaps from the past week. We've got a Bitcoin. We've got everything on the move. We've got Shiba on the move. We've got the dollar CAD. We got some tariff news that actually helped us with the trade. That's a new one. I've been telling you all week long about the tariffs, how you can ignore them and don't worry about them. Well, we saw a big move today, actually, during the overnight that really was predicated upon a new tariff announcement. We're going to talk about that. Also, we've got a lot going on. Remember our key level trade from yesterday? It was absolutely a fantastic trade, what I would call a banger. I've been saying banger a lot this week because we've actually done fairly well this week. We're going to talk a little Friday psychology. I know some of you like the psychology, some of you don't, but if you're brand new, I have to tell you real quick my views on how to trade a Friday and not really drive yourself crazy, because Fridays and Mondays are psychologically very, very important. Tuesday, Wednesday, Thursday, we're in the fight. We're getting caught up in the rush, all the trades, all the opportunities. Okay, that's great. That Tuesday through Thursday takes care of itself, but Monday's very important for getting momentum going. Friday's very important for preserving momentum. So we're going to go ahead and look at that. Yep, Bobby Bob, no donation Friday. Absolutely. That's exactly what we're going to be talking about here today. But it is the U.S. Open, and right now let's get out to the big board and see exactly what happened. We're off about a negative 250 here on the Dow Jones Industrial Average. S&P's off about 28. NASDAQ's off about 69. So it's not necessarily the biggest open in the world. I wouldn't get too carried away with it. But we are seeing a little bit of risk creep back in the market. We've got the VIX. That VIX right there up about 6%, up about 1, still very, very low. Historically, the volatility index, Wall Street's fear gauge. So right now, I feel like we're in pretty good shape. I don't know that this is going to turn into a trend day by any stretch of the imagination. Gold is on the move, though, up about 1.25%. And then also you've got crude oil up about 1.5% as well. So commodities seeing a little action. We're seeing a little bit of selling, a little bit of bearish participation right now in the open in the U.S. equities markets. I'm not sold that that's really going to take root today. But these are all the things that we're thinking when the market opens. We want to know exactly what our risk is. Our VIX, our volatility index is up. Okay, that's great. Stocks are down a little bit. Don't get too carried away by the big triple-digit losses, because it doesn't mean much. I mean, honestly, it doesn't mean much when the Dow is valued at 44,370 and you're off about 280. Who cares? It just isn't that big of a move yet. But it may turn into being a big move. So I want to get started by looking at the big board. U.S. dollar, if you guys are Forex traders, I know pretty much everybody in here is, and that's great. We had a pretty good Forex trade during the overnight. DXY, the dollar index is up about 0.20%. Really low levels, though, 97, 79, very, very low beneath 98. I mean, the dollar's been the big loser thus far in the Trump administration since Trump was sworn in on the 20th of January. That's a quick rundown on what's happening here on the open. We're going to trade it here in just a second. But I want to say hi to everybody. Got some new faces. Always got some new faces, and always a bunch of familiar ones. So, Gary, good to see you, Gary. Yes, sir. Always a pleasure. Yes, sir. And Captain Marr, let's go. I hear you. Let's go. Let's make some money here today. Jeffy, good to see you. Jeffy, Bobby, Bob, always a pleasure. Bobby, Tuku, good to see you, Tuku. All right, guys. Let's go ahead and get it going. I'll have the stream schedule up at howtotrade.com for next week here momentarily, probably in the next hour or so. Just still thinking through a few things on what we're going to cover next week. Should be a big week. This week was sort of a slow week, but it was a good week. Boy, there were some trades in there that were just absolute, what we call bangers. They're absolute bangers. So, all right, guys, let's get on with the show. Welcome to the Switch Markets community. This is sort of the beginning stages, the first, I would say, 6 weeks of really melding Switch Markets and the How to Trade communities together. So if you're a part of one or the other, I welcome everybody. And also, if you're watching us on Forex Signals TV, always a pleasure to join you folks there. If you have any questions at all, be sure to leave them in the live chat. I will cover them. I may not cover them right away, but we'll definitely cover them probably towards the end of the stream. I'll also show you some of my own technicals that I'm looking at, potential trades for later today. I do want a gold sell, but I'm looking at gold futures, and I think that I think our sell's already gone. I mean, we are really staring at a potential trend day up in gold, and one of the reasons why is it's Friday. Typically, bidders step in and they bid safe havens on Fridays. Okay, no donation Friday. Fridays are huge. Don't wreck your account or your momentum on a Friday, ever. Never, never, never. And I've done it. Believe me, I've done it. I've taken the big losses on a Friday, and guess what happens? You have to sit on it all weekend, and you have to wait chomping at the bit for that Monday open. You don't want to do that. So over the years, this is the system that I've developed on a Friday to keep myself out of trouble and make sure that I'm paying myself for my time. It's real easy to make 500 or 1,000 in a week and show up on Friday and say, okay, I'm taking my shot today. I'm going to take my 1,000 and I'm going to parlay it into 3,000 or 4,000. I'm going to have not a decent week, but a monster week. Sometimes it works. Most of the time it doesn't. And when it doesn't, you end up giving back a whole week's worth of wages, and you end up going home for the weekend, not necessarily broke, but flat, and you haven't paid yourself for your time. Fridays are big for me. So I call it No Donation Friday, meaning we don't take stupid risks and we don't give our money to the market. Believe me, the guys in the market, the institutions in the market, they have enough money. They have more money than you. They have more money than me. The institutional players, they don't get a dime of my money without fighting me for it. And I want everybody to think like that. I don't want to be hyper aggressive, and I don't want to get in here and say, oh, no, you got to trade it and be really. No, have fun with this. This is supposed to be a fun career, but it's an intense career, and it's a very serious career. And one thing that I don't do is I don't just donate. If I want to donate, I give to the folks that are struggling in Texas right now. I'll give to a lot of charities that I like that are on the up and up. That's where I donate. I don't donate to the markets. Every dollar that they take from me, I'm either paying for information or I'm being paid for my foresight. That's the way I look at it, and I want everybody in here to look at it like that. You don't just throw money in there and hope it comes back to you. Nope, we don't hope on this stream. Hope's for children and losers. There's no losers out there. And I don't know if any children are watching, but if you are, all right, you're getting started early in the trading space. Okay, winning week. If you're having a winning week, 50% of your profits go into your pocket. A losing week. If it's a small losing week, it means you're doing all right. It means you've lost a few, you've won a few. Trade it as usual. If it's a big losing week, shut it down. I said consider waiting till Monday. I would wait till Monday. If you're really getting your teeth kicked in this week, just stop trading. Come back Monday rested and ready to go. You have a better chance of generating profits over the next 5 days than you do getting back what you lost today. Think about that for a while over the weekend. It's very important that you understand momentum if you're going to trade. Neutral, usual trading. If you're at scratch, it means you're winning some, you're losing some. You're landing a few jabs. You're not getting knocked out. You feel pretty good. You got all the options in the world. You can trade as usual. You can reduce your leverage and just try to make a little bit, get some momentum going. That's a pretty good way to go. Or don't trade at all. I always judge that on my personal feelings. If I'm exhausted and I'm tired, then I'm out. I'm just going to take the weekend off, and I know it sounds, like, you're not going to work? No, there's plenty of things to do. Game plan, research, develop new approaches, but that's very important on a Friday that you don't blow your account out. That'll keep you going over the long run, and that's what everybody here wants to be, is a long-run trader, and that's what I would do. Okay, trade follow-up. Let's go ahead and get started here. Dollar CAD, I put this trade idea out yesterday, and when we cover these things, it's not a victory lap. Believe me, we cover a lot of losers too. Well, actually, not that many losers, but we do cover the winners and the losers. I did make an error on the next level. The next level is the same as the key level. That's my fault, but you guys should have seen the pips. We're looking for about 60 pips there, profit. Typically, I set these up as a 1-to-1, meaning if I'm looking to win 60, then I'm also risking 60, and that's where those profit targets and the pips are really designed to be not just your profit target, but also your stop loss. Something to think about there. This was a great trade. This was a banger. This is one that you just dream about. This is a good look at the chart. The dollar CAD went right down, hammered 38% right at 136.50, and then just spiked up to 137.20. The real question is what can bring that kind of price action? A news event. And we got lucky. Sometimes it helps to be lucky, not good. That right there is what just sent the Canadian dollar reeling. Right now, the Canadian dollar is rebounding against the USD after coming off to about 137.40-ish, somewhere in there, 137.35. But Trump announces 35% tariffs on Canada starting August 1st and warns of higher levies if Ottawa retaliates. So that is an example of a tariff news item that definitely drove participation. It spiked everything and paid us off beautifully. That's why I like my Fibonacci's. I love my horizontal levels. I really think that that's a great way to trade. But if you're into crossovers and things, that's great too. Just remember that untimely news event can really hurt you. In that case, it really helped us. There's no accounting for that. I didn't know that they were going to announce anything. We just had our levels, fell back on the levels, traded it as best we could, came up aces. Right here, though, a lot of tariff news, though. You guys can see what's going to develop here over the weekend. Be ready for anything. That we're seeing a little bit of risk. It's because of the tariffs. I told you earlier this week the tariffs don't matter. They're starting to matter. Why? Because we've got the monetary policy, the FOMC minutes out of the way. We're not going to get a rate cut until maybe September. All right, now it's all about tariffs. Boom, boom, boom. We're coming up on August 1st. Believe it or not, that's the big deadline for many of the reciprocal tariffs, as the Trump administration calls it. We're going to be looking for a little bit of bearish action, but we're also not going to be stupid with what we do. We're going to understand that it has to be big announcements to move the market. And yesterday was a surprise big announcement against Canada. Some of these, everybody knows. Trump's 200% tariff threat has pharma firms scrambling. Okay, we're not trading big pharma here, really. Trump's 50% Brazil tariff. Brazil's interesting because Brazil, a lot of things come from Brazil. Huge agricultural community, a lot of imports come into the United States, foodstuffs, coffee. Coffee's a big one. So I would be, if you're in the coffee markets, be careful. But the rest of it, I'm not too worried about tariffs just yet. What I am worried about is our key level up here in the Dow 30. Now, this was a trade idea that we put out a while back, and this one's been on the board for a while, but I still like it. We just barely missed a while back getting this one and an opportunity to sell it, but this Dow 30 is really coming into view. And what I mean by that is we have an opportunity potentially to trade this thing with a little bit of meaning, and I really think that we're going to get an opportunity, I would say, in the next several days to trade it. I hope so. Of course, then again, we don't hope, do we? There we go right there. Key level's 45,000. This trade idea is easy. We're going to look to step in and sell right in front of 45,000. I'm not going to spend much time on this because it's been on the board for a while. I thought we had the sell there. We didn't quite get it, but right up there is what I'm watching. 45,000 is the big level for the Dow. Tariffs, definitely a drag today. There's no doubt about it. I mean, that's what the headlines are. Right now, it looks like traders are trading the headlines. I also believe they don't want to be caught long risk assets going into the weekend break. However, I have been wrong before. This isn't really a trend day yet for me, but it's getting uglier and uglier as we move forward. So key level's 45,000. We're selling right up in front of 45,000. Be sure to check out this trade idea. It's in your analytics thread. I think we're looking at 44,975-ish, somewhere in there. You could even go 44.9 or 44.9 and a quarter if you want to be more aggressive. This right up here though should be a pretty darn good area. All right, the big story of the day, and this is no kid, and it's Bitcoin. Now, we've been talking a lot about Bitcoin lately, actually over the past 5 months. I've been very adamant about what I think is going to happen. And as far as, making a market call or sitting around and saying, hey, crypto's going up. Crypto's an interesting thing. A lot of you guys traded on day trading and short time frames. I honestly don't know how you can do it. Because it is a 24-hour market in the volumes. Unless you've got some tendencies of when the volumes come on, it's really tough to trade as a retail trader intraday on Bitcoin. However, 125,000, it looks like it's going to happen to me. I've been saying this for a while. I sort of gave myself a little bit of leeway, saying, by September, which gives us about another, 60 days or so. This could happen today. This could happen this weekend. This is a breakout run to the top side. And right there, you can see on our MT5 platform, you're right up around 117, 118. I can't read these fonts. I've tried to adjust the fonts. Way too small for me to even read from here. And I got a giant screen. My point is this. You're definitely in a breakout uptrend here. This is just price action with a key level. Now, the key levels thing that we talked about yesterday, thank you for those of you that joined the workshop. We'll recap the US 500 trade that we had yesterday. It was a winner. But the key levels are huge in this market. And right now, you're starting to see sort of a run towards 120. And so the big question would be, Shane, do you think there's going to be a fight at 120? I would say probably a temporary one. Quarters are bigger. Quarters are a bigger deal, believe me. 125, 150, 175, 200. Though that really is sort of the outlook moving forward. And with crypto, we don't know a lot about really what it is yet. And I know that sounds so stupid, but it's the truth. People sit around wondering what all these coins are and what their purpose is. What we do know is this. We do know that the U.S. government, spearheaded by the Trump administration, they're crypto fans. Trump Inc. made a ton of money floating crypto. They did. They made billions floating that Trump coin and doing some of the things that they did with crypto. They are fans. And the last administration, not so much. Gary Gensler at the SEC, not so much. He didn't like crypto. Well, these folks are crypto maniacs, and I mean that in a nice way. They're really supporters. And when you have an administration that is going to deregulate and get out of the way of crypto, this is what you're going to see. Now, I'm not going to sit here and say Kathy Wood, $1 million for Bitcoin. I'm not going to say that. I don't have to say that. We can say 125,000. We had a buy that was about 65 days ago. We were buying from about 89,000. You can see what happened here. A fantastic trade. So if I'm trading Bitcoin, I want to be long. I want to be long at least until 125. Now, the road could get choppy here. It really could. But what we've seen is a breakout above those highs, and we've run instantly. Bang, another 5. We broke over 113. We're printing 118 fast. And what that tells me is there's a tremendous amount of upward trajectory and a lot of bidders involved. So when you got this many bidders, don't fight them. Don't fight them. So let's go dial it down to a shorter time frame and see if we can get in on a little bit of this Bitcoin action. You'll notice I'm going back and forth between TradingView and MT5, and the reason why is I'm much better at running TradingView, And we're also working on a Pine connector video that's going to show you how to integrate your trading view with your MT5 platform on Switch. So this is an easy read for me. Right there, there's your low 520, and then there's your low 471. That's going to be our spike low, the beginning of this 4-day winning streak. And it's been a big one from right around 108 all the way up to 118, something like that. Fibonacci retracements, very basic, guys. Absolutely very basic stuff. Little pullback zone there, potentially. 115. It'd be tough not to buy 115s right now. I mean, if we could get it today, if we could get that pullback today, that's what I would call a high probability trade to the top side. I want to be a bull now. I don't want to be a bear. I know there's some folks in here that love catching knives and they love going against trends, and that's great as long as you're conservative with what you expect out of the trade. If you're conservative about what you expect, meaning you're not expecting to pick the absolute top of Bitcoin, then you've got a shot. Then you could maybe make a few grand on a pullback. I have no problem with that. That's great. Just have your stops down and your leverage in check because you are fighting a breakout right now, and it's a breakout on top of an incredibly bullish trend where the fundamentals match up. There is no resistance up there. There are no technicals to watch other than our big round number up at 125. So I would be very, very careful shorting Bitcoin. Don't get caught there. Pullback buys from 114.5 are great. Pullback buys from 115 are probably pretty good as well. Let me see. You want to see gold? Yeah, we'll get the gold. Eli, early bird gets the worm. Absolutely. Absolutely. And as far as an early bird goes, we'll get back to this Shiba chart here in a minute. I want to definitely highlight that because that's a pretty good one. But this Bitcoin chart on our 920 crossover, what can you really say about it? Right there was your buy entry. Your buy entry was down at about 107. That's huge. That's absolutely huge. You say, Shane, what about the sells? I go, the sells didn't work. Remember, if you're a crossover trader, your entire goal is just to get on the right side of a move like that. And if you got that on the 920, you did very, very well. Now, this is one that we highlighted yesterday, or I highlighted it yesterday on X, on the X platform. This is a good trade. Shiba Inu, one of my pets. I've been watching Shiba for years. You say, Shane, why are you watching Shiba? I go, well, it doesn't cost hardly anything to buy a Shiba. And, you can actually get in there and leverage yourself for some pretty good gains if you just wait for your entries. The line down here, believe it or not, we drew that last spring, and it's just a very easy key level at 10. You notice I'm talking a lot of key levels. They're very important. Right there at 10, bounced off of 10. Now you're up to what, 1347? Ignore all the zeros. So you're up about 1350. I mean, what is that? 30% gain since 10. That's a big gain. Remember, most venture capitalists or investors would I wouldn't say they would kill for 7% annually, but they would definitely give you a bonus for 7%. That's 30%. In any case, this break right here is all we needed to know on the last couple of days. There's your break at 1240. Now you're up at 1350. That's a pretty good pop after your 920 crossover. Remember, the 9 crosses over the 20. You got an opportunity to buy. I really like the daily time frame on stocks and crypto because you can trade them with cash. Now, I know it takes a lot of cash to make the kind of returns that you can make in the derivatives market. But the beauty of this is the 920 is a great timing mechanism. You just make the trade and you just let it play out. That's it. That's all there is to it. Really a great start there. I've got a lot of questions. Shane, where would you be taking profits on Shiba? I'd say, well, I mean, we got to know where our stop loss is. You could put your stop loss down there beneath 10 if you wanted to take an investment play. You could put your stop loss right there. I probably would have it somewhere right in there, more than likely. 1106, right beneath this sort of garbage swing low. And if in fact you wanted to break high, I got to get at least a 1-to-1 out of this. So 13.5. If you bought in right there at 1230, you're pretty much right there getting paid off at a 1-to-1 right now. So that trade you could book if you're a market structure player or a smart money concept trader, which a lot of you are, and there's nothing wrong with that. You could be shooting for these order blocks. There's an order block right there, somewhere right around 114.50, or you could use our key levels and our big round number, 115, or you could shoot for the top of market structure that we had developed back there on the 12th of May, and that's up there right around 117-ish. You got options. That's the beauty. Hey, listen, that's one of our biggest advantages of being a retail trader. It's true we don't have the money that the big guys do. We don't. We just don't have the money. We also, a lot of times, don't have the proper psychology because we're not incredibly rich going into the markets. It's a lot different trading if you're from money and you have a lot of money. Whereas if you don't have much money and you're trying to make that little bit into a lot, it's a completely different mentality. your margin for error is a lot smaller. That's why I recommend, if you don't have much of your own capital, maybe a prop firm is the best way to go, because they can, in fact, give you the capital and the liquidity and the resources you need to get in there and make a living, because it takes more than just a few bucks to make a living doing this. You do need some capital, and you got a couple options. You can start small and grow it over time. And don't say that it can't be done. A lot of folks don't believe it can be done. It can be done. It just takes time and patience and all of the dedication and hard work. A lot of folks don't want to do that. They want to jump in with a big account, start generating returns right away. And I don't have a problem with that. I really don't. I mean, at the end of the day, we're here to make money. If you can't make money, then you got to go do something else. That's what I was taught. So what I'm saying is there's a lot of different ways to do this. Pick the one that's best for you. If you have enough money to get started on your own, trade your own capital, that's probably the best way, because then you just get your money out at the end of the day when you want it. If you're with a prop firm, you have to follow the prop firm's rules, and you have to deal with the prop firm paying you out and not going under. So that's something to think about there. But those are two pretty good ways to get up and running in the markets. And remember, start slow. Start slow. You don't need to start big. Start slow. Learn all you can. And maybe one of these strategies like the 920 can help maybe develop and spark your thought process. Your number one asset as a trader, as a retail trader, is creativity. Creativity is a trader's number one asset. If you can look at these charts and look at this 920 and say, I don't know, Shane, it looks like it's the beginning of a decent strategy, but here's what I would do, X, Y, Z. That's what I'm talking about. Take some of these basic ideas, build your own. And once you've done that, then you've done something. That's for sure. All right, guys, let's go ahead and take a look at the US 500. We talked key levels yesterday. I just wanted to highlight this trade. This was right when we were on. We were looking at last week's high. I know this is very vague. This was last week's high right here. And you can see right there, 11 a.m., my time, 1 p.m. Eastern. That's when we were on yesterday live, and we actually watched this trade develop. Go back and check out yesterday's live stream. Well, we went right up and got paid. We went right up, got to hit our profit target and everything. This is a 30-minute chart, and now you've got sort of the big reversal there towards the end of yesterday's session. So we had a nice one-to-one trade. Our stop loss was beneath the trigger bar. Bang, went up and got entered, hit our profit target. Power of key levels. A lot of people make fun of key levels. I think I was taking a little bit of flack for, it's such an old trading style. And I'd say, yeah, it is. You want to know why it's old? It's because it works. There's a million new things that don't work every day. You don't ever hear about them. Key levels have been around forever. They will always be around. That was a good trade. Was it a great trade? That was a little sticky, but it was pretty good. Paid us off. Dropping gems. I don't know, Eli. I don't know. I don't like dropping gems, dropping diamonds on the ground. No, US 500 right here, though. I do want to get started with a good look at your 30-minute chart since the open. You can see that this formation right here, guys, if you're trading opens or if you're trading news events, this right here happens a lot. It absolutely happens a lot. And you say, what are you talking about? It's just a price bar. And I say, well, it's more than just a price bar. Because a lot of folks were really trying to dig in and make their decisions on what the U.S. Open was going to do based on these time frames, sort of that mid-London session. And it's really tough to do that because when the volume comes into the market, anything can happen. So what do you think happened here? We had a big move to the top, and then we had a big move to the bottom. We basically have chopped everybody up in this first 30 minutes. That's why I like to give it my opening range breakouts, what we're going to do right now. I probably should have told you that, but my opening range breakouts, I like the 30-minute chart. So I would watch this 30-minute setup and then the next 30-minute setup, and then we would go ahead and build our orb strategy. Now we're not going to do that. We're going to be more aggressive because in the interest of time, we got to develop some kind of trade to set us up for the rest of the day. So we're not going to sit here for the rest of the morning trying to wait for an orb to set up. This is interesting to me. You've got a really tight 30 minutes, and you can see what's happened in this 15-minute session. Boom, initial 15 minutes was down. Now the next 15 minutes bounces up. This is complete whipsaw. To me, this is a whipsaw type of a scenario. So if I'm going to trade an opening range breakout, is this a good day to do it? Number one. Fridays are tough, but we do have some possibilities here. We really do. Right up here. Take a look at this order block up here. This is sort of your overnight high. You had the big, you had the big sell-off up here yesterday when we started hearing tariff talk. That was when your tariff announcement came in and absolutely crashed things. People took note. This right here, though, this order block right here, this I could buy as being a potential profit target and a test. Now I don't think we're going to rebound and head up there, but I think that center one right there, That's not bad. That's what I call doable. It's doable. So the question really is does this range give us an opportunity potentially to target that zone? I would say yeah. It just really depends on where our breakout is. Now, is this enough distance to make it worth our while? Pretty tight. Pretty tight. We're going to have to get a bar close above this range before we get long. So we've got to be somewhere up in here with our close. That'll give us a chance maybe to hit that area. I just don't know that it's far enough. So if we're going to actually take this bullish trade, we're probably going to have to be looking for something up in here, up in this this real thin chain, which typically those areas get filled in, especially if they're news driven. I could see that to the top side. Now, where this gets fun is to the downside. We're already negative. If things get ugly today, you've got a real good shot at potentially building a heck of a breakout trade to the downside. So if I was playing this break, and look, I mean, our bar's not even set up yet. Our range isn't set up. I'm getting ahead of ourselves. But right here, take a look at what you got right there. You've got your overnight lows. You got a double bottom there on your overnight lows, something like that. So if we could get a close maybe right in here, boy, the door is open to the downside. I mean, there's nothing there. You can see right there. You could maybe be looking at the ninth, somewhere on that pullback. But take a look at this. I mean, that's also the ninth's low. That's 2 days ago. That gives us a pretty good shot at maybe getting in on that big breakout to the downside. But right now you can see stocks are getting bought. This is just a choppy mess. So is today a great day to play an orb? It's a challenge. But if you have a system and a strategy and you dial your risk in, then you just step up. You take a look at your orb, your opening range breakout on the 15, and then you go with it. Personally, I would wait and I would use the 30-minute time frame, but that's just me. A lot of folks really love the 15. That's for sure. All right, guys, let's take a look at a few very quick, just to look at the fundamentals. Initial jobless claims yesterday. UK GDP, we had UK GDP out during the pre-market, and it's not really a market mover. The only reason I bring it up is we're going to look at the British pound, and I think that that's a interesting little pair right now. It's on the move to the downside. We've lost about 0.63%. So we really need to look at this UK GDP real quick. GDP came in, gross domestic product. It's sort of all of the goods and services that you put out for a period of time. That's GDP, and that's how we measure a country's economic prowess. Now, here's the thing. You've got to be able to understand what's important and what isn't. This really isn't that important. Remember, everybody does GDP different. UK does it every month. The US does it quarterly. So US GDP numbers are going to be a little bit more important. But this right here is a monthly figure that shows an economic contraction. Now, it wasn't as bad as the last month, but it was a little bit worse than expected. So this sort of suggests that maybe that British economy is weakening just a bit. And you can see right here, the British economy contracted 0.1% month over month, following a 0.3% fall in April, compared to a forecast of an expansion. Back-to-back drops put the economy at risk of an overall contraction in Q2. Now, we've been talking about Q2 going negative. And if it goes negative here in the States, it's a recession. It's an according to Hoyle recession. So we're starting to see some economic contraction around the world. What does that mean? It means that we need to have our eyes open. We need to say, okay, things are changing here globally. Do we expect this to carry over or be maybe a leading indicator of what happens in the United States? I don't know. I really don't know. I think that's a stretch. I wouldn't get too carried away with the monthly numbers, but traders are trading it. And right now they're snatching up the dollars in favor of the British pound. So we've got a lot going on right here. I'm going to go ahead and get back to what I do here with my own analysis or my own framework, the Fibonacci counterpunch with my Bollinger Bands and my moving average and everything. What could we really say about this market? It was really boring and tight most of the week. Finally broke. Spike low here. So the first thing I would do is back off to a weekly and see if we have an anchor point. Okay, you got a little spike low here. I'm not in love with this range at all, though. Spike low, spike high. That's just a 2-week range. I'm not really interested. 78% right down there at 34.50. Yeah, probably be looking at that as being maybe the bottom for today. We're pushing weekly lows. Do you take that trade? Maybe. We'll have a trade idea out a little bit later today, probably in the next hour or so, and more than likely is going to deal with this pound. That's a pretty good entry. It's a pretty good entry. And then right down there, what do you have? You've got your 13-period EMA, which is 134.11. So you're going to have to risk probably 50 pips on this trade right here. But I think it has an opportunity maybe just to revert back up a little bit. I like this. The distance between 62 and 78 is significant. It's about, 70 pips. So we have a chance to get in there and maybe take 25 pips or something like that. I think we could do something like that relatively easily. Now, do we get an opportunity today? Looks like it. Looks like we may. Printing 134.96, we probably would be entering 134.60s. Something like that. That could be pretty good. Now, on a short time frame, if you're trading this intraday and not trading macro levels, what could you really do today? Well, we're sort of late to the party, as per usual. Little wave right there, a little 30-minute wave. A lot of folks don't believe in Fibonacci's. Spike high, spike low, right down there. There's your pullback. There's your failure at 38%. What does that tell us? It tells us the trend is down and the trend is strong intraday. Now you can see we bounced right off of this 62% level, our macro weekly 62%. It doesn't get any better than that. 135.28. You got a nice, beautiful bounce up to 135.53. 25 pip scalp in, out, piece of cake. Now the question is do we want to be long or short? You probably would want to be selling. You want to be a net seller. But once again, we have a key level in play, 135. You see we sort of bounced off of that. Now we're trading beneath that zone. I would just be waiting. I would be in wait and see mode. I would definitely be looking to bid down here. I'd be a net bidder at 134.57. Let's back off to a 4-hour. I get this question every day, Shane. Give me a time frame. I'd say, listen, if you're a brand new trader and you're going to start trading Forex, there's nothing wrong with the 4-hour time frame. Spike high there. As soon as we can get a swing low to set up, this would be a thing of beauty. If we could get this market to base out right around this 135 zone and then pull back, and we're selling 135.25 all day. Why? 38% 4-hour chart. It's going to line up beautifully with that long-term 62%. Sell it. Sell it. That's a trend following play with multiple indicators there. That sort of plays into my ideas behind fractals and what I think of fractal geometry with Fibonacci's in the markets. That's a long discussion, and it's too hard to get into now. But all you need to know is when those levels line up, pay attention. Pay attention. You definitely want those on your radar. All right, we got one more market. We got gold. We'll cover gold, and then we'll call it a Friday. Actually, I want to get back to our orb real quick. All right, there's our orb. It's a tight orb. Relatively simple. So there's your opening range right there. There's your A period. These are 15-minute charts, excuse me. I'm used to working with 30s. Right there, there's your high, there's your low, there's your breakout. Which way do you want it to break? Well, I mean, we can't project on the market. I don't know which way it's going to break. I would much rather be selling down here sort of into the ether. I really would sell that down into there as opposed to maybe taking a buy here because you know there's going to be sellers every step of the way. But you've got a chance maybe to fill this chain in up here. Is this worth doing today? It's Friday. So, if if this trade comes our way, we need to cash it in the next hour and a half, 90 to 120 minutes. Definitely what I would be looking at there. Is it the best day to take the orb? If you got a strategy or an approach, a lot of times we overthink it. If you're an orb trader, you just take the trade. That's the ball game. All right, let's take a look at gold, and then we'll call it a day. Interesting session. 4-hour gold chart, love it. Stairway to heaven right there. We're just taking off. I mean, really, realistically, if you want to take a look at a little bit of Elliott wave, something like this, 1, 2, 3. Remember, 1s, 3s, and 5s move, 2s and 4s pull back. Do we get a pullback? I don't know. 4-hour, though, this could be pretty good. I'll be looking to get long, but I've got some levels up here. We need to figure out what the heck those are, right? Let's go right into a monthly. Monthly is just an absolute log jam, bullish pennant. We've talked about that ad nauseum. Let's go to a weekly. Three-week range. Spike high to a spike low, 62% right up there at 33.75-ish. That's probably your sell. So right now we're printing about 33.53. So if we get up another $20, which I don't think we will, judging by how slow gold's been. But if we do get overextended and get up in that area, then that's your sell. That's your sell for today. I think that that's a great trade. I'll be looking at that probably for early next week. I doubt we get it today. As far as what can we do right this minute, let's go to a daily and just see what we're doing. Yeah, okay, we got a nice big move up. We talked about gold being a mover. We broke above 50%. That means nothing to me unless we can get some commonality here. So 33.50 right there. Let's go to a 4-hour chart. Okay, there's sort of the pullback. So we're already seeing a key level in that value area really setting up. I don't want to play Fibonacci pullback here because this level is liable to bring choppy price action. So if we do, in fact, sell off, you'd say instantly, Shane, you're going to bid 33.40s, right? Not necessarily, because you've got this area right in here, and what can happen is we can get stuck in a phone booth, and instead of really getting our nice bold retracement, we could end up doing this number down here and actually end up losing. And I'm not into that trade. I want a better one. I would love to see price extend up here. Now, if this is the scenario, and we go up there and check that out, then we're selling there. We're making money there. This pullback right down here from 33.50. Then we just trade between 33.50 and 33.74, and we cash in on the top sell, and we cash in on the bottom buy. Remember, stay flexible as a trader. Always remember that we don't need to be net long or net short on anything. We can always just look at the market and say, okay, I want to be short from here. I want to be long from here. We're going to hit it here. We're going to hit it here, and we're going to walk out with a pile of chips. That's the idea. So, that's how I see gold right now. I'm not too impressed with what's happening. I think I have a range number up there in gold futures like at 33.70, 33.68 or 70. I don't know. I'd have to look at my chart, but up about 1.2% in the futures market right now. Spot gold's up just under 1%. So we're definitely moving higher. Silver's a big mover. Look at silver. Let's pull a silver chart up 2.5%. But we finally broke out with silver. There it is. So at this juncture, if you're trading silver, life's pretty good. I love this type of stuff right here too, because you got a spike low and a spike high. There's your pullback right above 38%, and then now you're rocking and rolling to the top side. Well, take a look at this. And this is one thing. This is one last observation, and then we'll go ahead and kick off for the day or the week. But this right here, looks like we got disconnected somehow. Been having internet problems here today. What is it? What's going on? Looks like we did get disconnected, though. All right. It's always something with the technology. Always something. In any case, what we've got right here is a nice big, if anybody's out there still watching, we've got a nice big bullish pennant, nice break. We went up, we sort of traded sideways, and now we've got really a nice big break to the top side. So if you're trading silver, congratulations. That's a great capitalization on a bullish pennant. That's a weekly pennant. That's nice compression right around that 36 level. Now we've broken, and the thing that I'm thinking is how high does this thing go? It really does. And when we start seeing this type of move, we got to get in our way back machine and say, okay, when was the last time we traded at this zone? 2011? That's miserable. Absolutely miserable. Silver, I mean, I know it's really simple, and a lot of folks don't like simple. You guys like to make things really hard. A lot of folks do. Keep it simple. 40. Looks to me like that's where we're going. 40. All right, everybody, I'm going to go ahead and sign off. Sorry about the technical difficulties. Looks like my live chat's gone down. I'm not surprised. It's always something with technology. Always something. I've been fighting the internet seemingly all week long. I've got the fastest thing you can get where I'm at. I've got a hard line. I've got it plugged into the wall back there, into the router. So I don't know what's wrong with it. Typically works very well. My DOM's working. All my prices are flowing, so that's good. All All right, guys, I'm going to go ahead and sign off. That was the U.S. Open. I think we set you up for some pretty good trade ideas for later today. We've also got the stage set for early next week. It was a great week this week. Remember, it wasn't a great week. It was okay. It was really slow in spots. I thought that there wasn't as many trades as I usually see. Still, though, I'm not complaining. I think next week's going to be more of the same. We just have to be honest. We're getting into those summer months where, nothing happens and then everything happens. I like the steady trade of the early spring and the fall. Those are much better times for me to trade personally. But this is, summertime's not bad either. We get into rotational markets and summertime's pretty good. All right, guys, you have a fantastic weekend break. If you're tired, if you had really a brutal week, get some sleep, get away from the markets, get away from this stuff for a few days. Come back ready on Monday. We're gonna have another slate of live streams for you on switch markets and on how to trade and Forex signals. So, as always, if you have any questions at all, be sure to come on over and reach out at the How to Trade. Send me a private message, and I'll be sure to get back to you. And if not, come on back next week. We'll have more trade ideas. We'll also have more market analysis and probably a few trading workshops. A lot of folks really love the workshops. So we'll pick a strategy, and we'll see about going through it. All right, everybody, until next time, trade the action well, and we'll talk soon. See you.